pointing out. The first of them, as you said, is the rising stock prices. If you look over here, you can see that in the last 6 months through October 8th, the stock market had its best 6 months since 2000 for any 6-month period, rising 36%. And that's part of why people are talking about this. Now, why is the stock market going up? It could be a bubble. We're going to talk about a couple of other things, but there's also a fair degree of optimism around AI and the fact that corporate profits have been quite strong as companies are using AI to cut costs and things like that. So there are people who believe fundamentally the stock market is on sound footing. But if you look at the stock market compared to other peak markets, it does look pretty scary. So this is what we call the price-earnings ratio. It's how we measure how expensive stock prices are, the ratio between the stock price and how much the company's actually earning. And you can see here that at present, we're at 39, which is well above the 50-year average right over here of around 23. And so I've shown you 3 other similarly expensive stock markets. The global financial crisis at 28. Now, that was not as much a stock market crisis initially as a banking crisis, so a little bit lower. The famous dot-com bubble, the last time we were in a situation like this, of course, it was the internet we were talking about. And then, thanks to Andrew Sorkin, whose terrific new book is out, #2 bestseller on the New York Times list, and he's drawing the analogy to 1929, when it was only at 33, actually a bit less expensive. There's certain other adjustments. 1929 was a long time ago, but the market was expensive. What happened after those high prices? The stock markets all dropped pretty precipitously. 56% after the 2008 financial crisis, 49% after the dot-com bubble, and a stunning 85% after 1929's crash.